Meanwhile, Treasury bonds are the safest investment venture. And if you use the right strategy to invest in them, they could be quite profitable. Recently, I was speaking to a friend of mine, Ugandan, this is on you, and he told me that he has always heard people talk about treasury bonds, but he has never decided to invest in them. He has invested in a lot of things, but the way I explained them to him, he decided that he is going to start investing starting this month. And another friend of mine, Joe, told me that someone had lied to him that you can only invest in bonds if you have 100 million and above. What? You only need about 100,000 to start investing in treasury bonds. So today, my friends, I'm going to answer 5 questions about treasury bonds. Number 1, how do they work? Number 2, why should I invest in treasury bonds? Number 3, how much do I need and how much do I earn? Number 4, how do I start? And lastly, what is my winning strategy? As we begin, I also have 3 requests for you who is watching. A, please get a pen and a notebook and take some notes. But if you don't have one or you can't note down, save this video for future reference. And lastly, I beg of you, be patient. This is not your type of content that you see on TikTok, dancing and no, this is content to develop you, to grow you, where we share lessons with each other. So let's begin. How do treasury bonds work? I need you to know that I'm going to use the simplest language for anyone to understand this concept. A treasury bond means that the government of Uganda needs some money and wants to borrow from its citizens. So it tells Bank of Uganda, which we also call the central bank, to get money from the citizens, which will be used to develop roads, hospitals, or the other reason could be that we want to reduce foreign aid. We want to reduce foreign debt. We don't want to borrow money from other countries. So let's borrow from our own citizens and they earn something from them. So what the Bank of Uganda does, since they're not everywhere in your village, in your district, in your sub-county, they also instruct banks, commercial banks, to do what? To come and borrow money from you. So through your bank, Stanbic, Standard Chartered, Housing Finance, and so on, you lend money to the government of Uganda. And at a given agreed period of time, your money is returned to you, a pulley here, with an interest. So these are the other facts that you need to know about how treasury bonds work. Facts. Fact number 1 is that any individual, company, or circle can actually invest in treasury bonds. Number 2 is that the amount of money you need is only 100,000 to start with. So we have 100,000 to 200 million. This group we call price takers. Now, follow me closely. Later, I'm going to tell you what is the difference between these guys. And there's another category of people who can invest 200 million and above. And these ones, we call them price setters. The reason as why I've introduced this, the reason as why I've told you about this too, is because there are rules that apply to this guy that do not apply to this guy and this guy. And number 3, I want you to know that there's what we call a primary market and a secondary market of treasury bonds. So what is primary market? Primary market means that Bank of Uganda actually sells what the technical guys call auctions out treasury bonds. But it simply means that government invites people to come and lend money to it. And usually they do it every after 28 days. And you can find a calendar on when they invite people to invest in bonds on the Bank of Uganda site. But you can also follow me. I'll keep on giving you details. Number 4, secondary market. Secondary market means that if you invested in a bond for about 10 years, but after 2 years of running this investment, you feel like you want to pull out. So there's 8 years remaining. Now, what they are going to do is they are going to put it on what we call the secondary market. We are going to trade it out with other people. If there's some other guy who can buy it at 8 years and only take the privileges of 8 years, well and good. We move on. The question is, what is our last fact, which is about how long do I need to invest? You can invest 2 years, 3 years, 5 years, 10, 15, and 20. Remember, these are different from treasury bills. If you want to know about treasury bills, follow me. Tomorrow we are going to have a video on what treasury bills are. Treasury bills are short-term, treasury bonds are long-term. So let's handle the next question. Why invest in treasury bonds? 6 reasons why you should invest in treasury bonds. Number 1, cash flow. Cash flow means that if invested rightly, you can have an interest, you can have money the other month. Money keeps on coming in. Remember, a treasury bond has what we call biannual interest. Being biannual means that after 6 months, after a half of the year, we pay you an interest. If your interest was supposed to be 1 million at the end of the year, we just divide it by 2, and after 6 months, we give you some 500,000. I hope that is clear so far. So number 2, collateral. So if you have this guy, you've all received 100 million, and the guy wants to invest in trees, buy land of 50 million, then grow trees. This is how you beat him. You can buy bonds worth 100 million, and after buying bonds of 100 million, borrow money from the bank, still 100 million, and do forests and even buy land. So you have an investment here, and you have an investment here. You just start paying off the loan. Number 3, ease of transaction. It is easy for you to start investing in treasury bonds, and I'm going to take you through before the end of this video. Number 4 is liquidation. Liquidation means that this money is available in liquid. It's like money. Anytime you need it, you can access it. How? You remember we talked about the secondary market, that the moment you feel like, okay, I really, really need this money, we can put it on the market and someone will buy it and you get your money. So number 5 is diversification. This simply means that in any investment and business and in life, we are advised that never put all your stones in one basket. So if you've invested in somewhere in business, you've invested in circles, you've invested in investment clubs, you've put money in the farm, you've put money in some shop, also put money here. And you see, the bond can also operate as an insurance, that you see other things may not work, but this is assured, which takes me to reason number 6, safety. The government of Uganda has been borrowing money through bonds from its citizens since 1969. That literally means that 7 years after independence, and it has never defaulted. Why? Any change of regime, the next government that comes, it takes over the liabilities of the previous government. So safest. So our next question is the one most people are interested in. How much do I need to start? And how much do I earn? Now, number 1, we've already talked about this. Here, we have 2 categories. Category number 1 are the people I told you about that we call the price takers. And these guys can invest from 100K to 200 million. The reason as why I'm specific about them, that the moment your investment money is below 200 million, your decision to invest in a bond is automatically accepted by Bank of Uganda. But there are these guys who are above 200 million, the ones we call price setters. These guys negotiate on your behalf. They literally determine the interest rate. We are not going to go into that. All you need to know that you, who is likely to be below 200 million, the moment you buy a bond below 200 million, you automatically be accepted. So how much do I earn? So even at earning, I want you to take note of two facts. Number one is that your interest is going to be between 10 to 15% per annum. Per annum means every year. Simply suggesting that the guy who has invested about 20 years in a bond is likely to have a higher interest. Now, fact number two that I want you to take note of is that there is some taxes. Anyone who has invested between 2 to 10 years, it attracts what we call withholding tax of about 20%. And anyone who has invested 10 years to 20 years attracts only a withholding tax of 10%. Let's take, for example, if your interest was supposed to be 1 million, when it comes through, it means government is going to take off a percentage at 20% into taxes. This is about 200,000, so your earning will be 800,000. However, if you invested long term and you were supposed to get 1 million, just like the other guy, if we put a 10% interest, this means minus 100,000, and that brings us to only 900,000. So literally, they've only taken off 100,000. So before I get to the strategy that I want you to use to manipulate all this to get the best out of bonds, let's ask ourselves, how do we start? Here is how you start. So these are our simple steps. Step number one, if you do not have a bank account, you're going to first get a bank account with any bank of your choice. Stanbic, DFCU, Standard Chartered, Equity. Get a bank account. Step number two, if you already have a bank account, walk to your bank and tell them that you want to open up what we call a CSD, a Central Securities Depository account. This literally means that you're opening up a bank account with Bank of Uganda, but it is your bank that is helping you to open that account. And they will give you a 2 pages form to fill. Now, this form is very simple, and the person who's going to help you will take you through. No hassle. The moment you have this account, the last step that we are going to go through is to invest. Now, this is when you decide whether you want to invest in the primary market. If you want strictly on the primary market, the bank will tell you when Bank of Uganda is going to auction again. But if there are guys who already have bonds that they want to sell, you just choose which bond do you want. Do you want a 2-year, a 3-year, a 5-year, a 10-year, a 15-year, or a 20-year? And ladies and gentlemen, you have invested in a treasury bond. So what is my winning strategy? And this is where it is beautiful. So listen to me and follow me closely. There is something called the ladder strategy of investing in bonds. The ladder strategy of investing in bonds. Most speakers and trainers tell you that you should invest your money in different months for a full year. No, today I'm going to change something. Remember, our interest for treasury bonds is biannual. It means every after 6 months receive our money. Now I'm going to use my example. I bought a car, a Nissan Murano, a few years ago. I think in 2020. It was about 40 million. And my first piece of land was 20 million, which brings us to about 60 M. So if I had chosen not to buy this car, we are going to see how we would have invested this money in the bonds. The first strategy we are going to use is we are going to buy a bond of 20 years so that we can qualify for a 15% in interest, and we lower our taxes to 10% only. So what do we do here? Well, what we are going to do, we are going to get this 60 million and divide it by 6 months. 6, which brings us to 10M. So this is what, my friend, you're going to do if you have 60 million. You're going to come in the month of January, it's starting a few months from now, and buy bonds of about 10 million. And then when we get to Feb, also invest 10 million in the bond. When we get to March, put 10 million. When we get to April, put 10 million. Again, when we come to May, what do we do? 10 million. When we come to June, what do we do? 10 million. So see what is going to happen. Because we've invested 10 million at an interest rate of 15%, it means we qualify for to 1.5 million in interest every year. Since it is biannual, it means after 6 months, you're going to receive, divide by 2, after 6 months, you're going to receive 750,000. Look here, look here, look here, look here. Now this is where I want you to be excited. The bond that you invested in January, by July, it's going to have made 6 months. And so they are going to pay out 750,000. Remember, we have to take off what? The 10%. What is 10% of 750? Minus 75K. Again, in August, we are going to get the biannual interest of what? Of Feb. Another 750 minus 75K in taxes. Still, in September, another 750,000 because of March. Again, October, another. And in November, because of May, another 750K. In December, we also get another 750K. Of course, minus the 75 in taxes. Until you do what? You reach 20 years. Actually, I usually tell people until death. Why? Because after 20 years, you can reinvest this money. The last step you're going to do for me, remember, how much have we been receiving? 750,000 per month. If we subtract 75,000 per month, we get 675,000 per month as our net interest. Now, if we have our net interest, what we are going to do, every month when this money comes in, we can now distribute this money to other investment ventures. If you've not understood anything, my friends, put it in the comments below. We shall answer it, and most likely with another video. Now, these are my final requests. If you've watched and loved this video, share it with another person. If you make some money, share with me. And if you feel like this is like healthy foods or fast foods on TikTok, share this health food with your friend inbox. Thank you.